Tesla earnings are out. Now, this was a miss on the top and bottom lines, but the stock is actually up over 6% as I'm making this video. And there is a clear reason why, and I'll share it with you later. I'm going to go through the numbers. I'm going to give you some thoughts and analysis. Now, what's funny about this is earlier I had CNBC on, I was making lunch, and I normally don't watch CNBC much at all. There was a segment where they were talking about how Tesla is a car company. And then 2 minutes later, they said, all eyes on Tesla earnings tonight because it's a big part of the tech sector and it can move tech stocks in the whole market. Bruh. So which is it, guys? Is it a car company? Is it a tech company? More importantly, is Tesla stock a buy now? I'm here to share the facts and some thoughts and where the stock might go next. So EPS 45 cents adjusted versus 51 cents expected. Revenue 21.3 billion versus 22.15 billion expected. And you can see the stock is actually up 7.66% right now. Now, part of that year to date, it was down 41.79% going into earnings. Over the past year, down about 11%. So if you look at this 8% after hours, it's down 3% over the past year. Now, over the past 5 years, if you've been invested in Tesla, you've made 822%. So you know the story, Tesla's plummeted this year 42% on concerns about weak deliveries, competition in China, and the company's ongoing price cuts. Tesla also recently cut 10% of its workforce. FSD has been a big topic as well. Recently cut the price on FSD. Musk is now saying there'll be an unveiling of the Tesla robotaxi on August 8th of 2024. And the earnings call is going to happen here soon, and the stock could move either direction depending on what's said in that call. One important thing that we're going to be listening for is about the cheaper car, that $25,000 car. There's been rumors that the car is no longer part of Tesla's long-term plans. Now, Musk denied that on Twitter and said that it's still a go, but you've just had a perfect storm of negative sentiment and headlines that has continued to put pressure on this stock. We've covered this stock over the past few weeks, and we've talked about some of these challenges. So the Red Sea conflict, the arson attack at Gigafactory Berlin, the gradual ramp up of the updated Model 3 in Fremont, Cybertruck issues. You've also had Cybertrucks that have been recalled. Global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. Now, what's interesting about that is General Motors reported earnings this morning, and this isn't anything too exciting, 7.5% growth, but it did beat on the top and bottom lines. In fact, beat by 51 cents on EPS, and revenue beat by 1.22 billion. And overall, that earnings call was pretty positive. The stock was up 4.37% today. While many are pulling back on their investments, we at Tesla are investing in future growth, including our AI infrastructure. Now, if this is just a car company, why is it investing in AI infrastructure? Bruh. Production capacity, our supercharger and service networks, and new product infrastructure. Now, I heard somebody say earlier this morning as well that Tesla has no moat. Let's just pretend for a second that you don't think Tesla has a moat with cars, which would be false really if you look at the data, but let's just pretend. You can say, well, what about their energy storage? Well, there's no moat. What about the solar? Well, there's no moat. What about the supercharging network? There's no moat. Well, wait a minute. Why is every other car manufacturer signing up for Tesla superchargers if there's no moat? What's going on here? Of course, you can make the argument, superchargers, that's not a big part of the business. It's not going to make them a ton of money. Cars are still the focus. It's a car company. It's certainly a diversified car company and has technology at its core. Someone also said, well, everybody's got self-driving. This is not something new and everybody else is going to have it. It's a commodity. I don't think people who say that totally can comprehend just how much time, how much money and effort Tesla has spent on building this out. Look at this. Tesla FSD fleet passes 1 billion mile milestone.
Billions and billions and billions and billions and billions and billions.
This is straight from Tesla on X. 1 billion FSD miles driven. Look at that ramp up. This goes all the way back to 2020. So just in 4 years, look at that pop. This looks like an NVIDIA stock chart or maybe even an NVIDIA investor deck. One of those slides where they show 1,000x computing opportunity. Now, to get to 1 billion miles, that's going to take some time and effort. And so you've got Mercedes out there, you got BMW. Of course, there's going to be competition. But I think you can make an argument here that Tesla is probably going to end up using this as a software as a service, software subscription type model, especially for some of those lagging companies. When you think of like Ford and GM, they're so far behind. We recently undertook a cost-cutting exercise to increase operational efficiency. We also remain committed to company-wide cost reduction, including reducing cost of goods sold per vehicle. Ultimately, we are focused on profitable growth, including leveraging existing factories and production lines to introduce new and more affordable products. The future is not only electric, but also autonomous. We believe scaled autonomy is only positive with data from millions of vehicles and and an immense AI training cluster. Well, they have this. We have and continue to expand both. To make FSD supervised more accessible, we reduced the price of the subscription to $99 a month and the purchase price to $8,000 if you're buying it at one time. And this is in the United States. Now, one thing to note here, this is big. Operating cash flow, $0.2 billion in Q1. Free cash flow, negative $2.5 billion. This is for AI infrastructure CapEx. That's $1 billion of that. $2.2 billion decrease in our cash and cash equivalents, but Tesla still has $26.9 billion in cash and equivalents. Increased AI training compute by more than 130% in Q1. I guess it's just a car company. Record energy storage deployment, over 1,000 Cybertrucks in a single week in April. So total automotive revenues right here, you can see year over year, that's down 13%. You got to call a spade a spade. Energy generation and storage revenue, it's up 7% year over year. Services and other revenue, 25%. So Model 3 Y production, you got negative 2% year over year. You can see some of these deliveries, negative 10%. You got negative 63%. You know, some pretty bad numbers in here, pretty mixed, but I think it's probably what we expected. Here's another snapshot of this just to kind of see it. So missed by 5 cents on EPS, and then revenue, that's negative 8.5% year over year, missed by just under $1 billion. We're going to look at a chart here in a second. I'll tell you where I think the stock could be headed next. You can see it closed down at $144.68 today. I think it's important to remember too, obviously this stock has come a long ways in a short amount of time. A lot of people invest towards the top, they buy off of that FOMO, but remember, investors who have been in this company for a long time have made a lot of money. This is showing you vehicle production going back to 2017, only 101,300 vehicles. Last year in 2023, 1.8 million. Now in 2023, we were thinking, 24 could be a big year, over 2 million. We might not get that this year, depending on how things play out the rest of the year. But it is important just to remember how much Tesla has grown over the past several years. And obviously with that, you have automotive sales revenue, nice trend along with it. Energy storage deployed too. Also, look at the difference here from 2019 to 2023. Big numbers. Vehicle deliveries, you can look at services and other revenue. All these things are ramping up. And of course, we talked about the FSD miles driven, over 1 billion at this point. Going back just to 2022, Q4, 90 million. What do you think is going to happen as more and more people sign up for FSD and it's cheaper and cheaper? I've shown you guys this site a few times, and if you haven't checked it out yet, I encourage you to do so. If you're a visual learner, this is a great tool just to give you an idea of progression and things like that with businesses when you're investing. For me, I think a tool like this is very helpful for retail investors to give us an edge. Now, I've got a coupon code you can use to get 10% off. So it's only $9 a month to give this a try. This is called Mega Charts. There's a link that's pinned in the comments. Use coupon code FiredUpWealth. So Tesla quarterly revenues, this is by segment, Q1 2019 to Q1 2024, this recent quarter. This is a good infographic as well, because it shows you that we were trending upwards and now we've got a little bump in the road. Now, is this a growing pain or is it part of a larger trend? In the shareholder deck, it talks about volume growth rate, maybe notably lower than the growth rate achieved in 2023, as the company looks to launch its next generation vehicle and other products. This is telling you that Tesla is telling us that they're still planning on doing a next generation vehicle. It doesn't give us the exact details of that, of course, but down here, it does go into more detail, and it says accelerating the launch of new vehicles, including more affordable models that will be able to be produced on the same manufacturing lines. Now, this is important because if you remember the Cybertruck, that was not the case, and it was very hard to manufacture, still is. Everything for the Cybertruck had to be customized, and it was very expensive, something that Musk said was probably not the best idea in hindsight. Tesla's aiming to fully utilize its current production capacity and achieve more than 50% growth over 2023 production, and that's before investing in new manufacturing lines. So right now, it's trying to be shareholder friendly. It's trying to focus on that growth before it spends more money. This is also a very powerful visual because it's showing you net income by quarter. 2023 Q4, 7.9 billion. This was really solid. Now we've got 1.1 billion. This is going all the way back to 2021 Q2. So sales growth across EVs is slowing, and Tesla and key rivals have been slashing EV prices. Tesla's gross profits plummeted 18% in the first quarter, of course, partly because of those price cuts. Also, 2 key executives have resigned. This is a big deal. Capital expenditures rose to 2.77 billion, up 34% from a year earlier. But the stock at this point is still holding up. It's up 7%. It's $153.73 right now after hours. I'll keep going through that chart here in a second, but I want to make sure I cover margins because this is a really big deal. One argument for the longest time is, you look at Tesla, it has the same margins as something like a Ferrari Ferrari. Well, margins have come down. You look at the gap, this is the total gap gross profit margin. You can see Q1 2023, 19.3%. This most recent quarter, 17.4%. So down almost 200 basis points again. And this has come down about 2% in that 1 year period. You look at EBITDA margin, same kind of deal, 18.3% to 15.9%. But with all this negative information, why is this stock still up after hours? Now, what's interesting about this, guys, Musk told us they were going to still do the less expensive model. And that really is the primary reason why the stock is up. Tesla to launch new models ahead of planned timeline, shares jump. So Tesla just told us it's going to introduce new models before the second half of next year. And at one point, shares are up 9% in after hours. So more affordable models. But Tesla didn't offer a ton of details on the new products, but said they would arrive before the second half of 2020. Reuters exclusively reported on April 5th that Tesla had scrapped the plans for this car, which investors expect to cost around $25,000 and really be the next growth driver for Tesla as a mass market automaker. Now you can see this S3 is 136.26. These are Fibonacci pivot points. The stock got really close, $138.80. It got really close. You can see right here. That was a 52-week low. It did break the April 2023 low of 152.37. And if you go back to January here, 2023, Tesla almost broke $100 a share. It was 101.81. It ripped from $101.81 all the way up here to $299, almost $300 a share. And then, of course, you know what happened then? Fell off a cliff. So we've been telling you on the channel that we like this stock long-term as a 5-year investment. The stock is definitely not out of the woods yet. You saw some of those negative numbers that I just showed you here. Under $150 DCA. And depending on what earnings did tonight, you could have seen the stock go lower. Looking at the Fibonacci retracement, I mean, obviously 101.81 would have been the next area down here if it was going to test those lows from 2023. But your first line of support here is that $136, which it did hold up. I think around $120 was a possibility. It still could happen later, but really this is the range in here. I think if you're dollar cost averaging in here, that you'll probably do well longer term. Now, if you believe that this is a car company and not a tech company, well, it's still expensive and you're not going to touch it at $144 a share. But as of right now, the stock's up over 10.5% at $160 a share after hours. I think it will be interesting to see what happens here as earnings continue. The call is still going on, and some of this could be short sellers that are just covering their shorts. It's hard to say exactly what's going to happen in the short term with Tesla, but long term, I am bullish on this stock, and I'll continue to dollar cost average in both portfolios. If this was helpful, make sure you subscribe to the channel, drop me a like, drop me a comment. Have a great rest of your day. Take care.